Hello everybody, welcome to the updates for today. So just looking at the Brent oil, again Brent oil is right at the gap resistance. You can see here at this level which is about 45.75, and we can see that it's sort of consolidating the gains here. So this on the daily, and this is the 50 moving average, the orange line. Of course the trend is up, but we can say that right now this counter is consolidating and you would want a decisive break above this level. The nearest resistance is placed at about 52. As you can see here, this is a strong pivot level, a support, and then a resistance. So on the daily, that is a strong pivot level of 52.81. So let's move on to the next one. This is Russell 2000 index, and of course, this is still being traded. The day is still on as we talk, but we can see here that the 20-day moving average is above the 50-day moving average, which denotes a good uptrend. We can also see that the prices are making new highs, and currently they're near the 20-day moving average, taking some sort of a support. As the day is still not over, but we can see that after this, you know, bearish candle, we have, which was at a small support zone here at this top at 1538, we got a bounce, and you would want to see a new high being made. So that's likely, but there's a strong resistance here as well at about 1613. So all in all, I would say yes, this is still an uptrend, but we do have the markets approaching sort of a strong resistance, and it'll be interesting to see how it behaves once it gets there. For now, definitely has a little more upside. So this is DAX, or the German index, and as we can see here, the same pattern. We have the 50-day moving average and 20-day moving average trading above it. The prices are above the 20-day moving average as well. And as we can see here, there's a small gap up today. So this was a previous close. It's gapped up above the previous highs, and then it's now going higher. So at this level, which is 13070, that is a strong resistance on the daily. But after that, I think if this were to get taken out, the next resistance is at about 13518. Looking at the market, of course, all the trend right now is bullish, and the market is, you can say, in an uptrend. So for all practical purpose, we assume that the trend will continue for a while, as we don't see any reversal pattern forming here either, nor do we have any real bearish price action either. S&P 500 index gap up, and as we can see here, the 20-day moving average and the 50-day moving average again pointing upwards. But the thing to note here is that the 20-day moving average is sort of running away from the 50-day moving average, which shows that the prices are sort of stretched. And also you can see the price itself is further away from 20-day moving average. So while this is an uptrend which is, you can say, fairly stretched at the moment and not a good entry point. So maybe if S&P were to correct, we would actually take a we would take a call if we can go long, but right now I don't see that happening. So again, CAC, same pattern, a lot like DAX, but here the thing to notice is that 20-day moving average crossed below the 50-day moving average, and of course the price also broke below it, and this is now just again regaining the 50-day moving average. So we can say choppy price action, and once you have a choppy price action, then you want to stay away from that sort of index. But of course, if you see this in perspective with the rest of the index, again, the longer trend is up. If you were to see this, and this whole thing here looks like a symmetrical triangle. Combining this with the other indices, you would say that this would also constitute sort of an uptrend. And you can say in the medium term, this is in a sideways market, but has a bullish bias. So emerging markets, again, we have the same 20 moving average above 50 moving average, but as you can see, the 20 DMA is further away from 50 DMA, and you could see some sort of a small mean reversion. But yeah, the uptrend is pretty much intact, and we should look at long entry points. So Dow Jones, healthy uptrend, continuing to make new highs. This is a pretty strong resistance here at about 28,197, where the market is positioned right now. If it gets taken out, then the next one is 28,909. But the trend is up, and we are looking at probably some more gains in this in the index. So Nifty, again, the same 20 DMA above 50 DMA, but you can see over here that the market is sort of, this up move here is slightly more labored. In other words, if I were to see here, the trend is a lot faster, but here it sort of is looking weaker. If you see the amplitude or the highs that are being made, they are not like here, very, very clear highs. They're just sort of struggling and going higher. And the resistance at 11,621. So, yeah, I mean, limited upside will be interesting to see how this behaves, but overall, it looks a little stretched, though in an uptrend. So Nifty Midcap again the same story, nearing a very strong resistance level, and the 20 DMA and 50 DMA both are stretched. And the look at the prices; they are just so fast stretched from the 20 DMA. I think we could have a mean reversion anytime soon. Probably we will be something like a climax. If you notice here, you notice this these two bars are sort of very small range bars, and that's generally the scene, or these generally seen when you have like extended markets and sort of indecisiveness. So you could say that maybe not too many buyers are entering at the moment, which could be the reason why we are having this kind of a pattern. So it, any time you could see mid cap correct. That's really how it stands at the moment. You might just have a very sharp up move and then the next day reverses, but it's not an entry point, that much is for sure. So Korea Composite bouncing up from a support level here. Shanghai again the same pattern, 20 DMA above 50 DMA, consolidating at the moment. The uptrend is intact and probably will be looking at some sort of a breakout. But at the moment, yes, the uptrend looks absolutely intact in this index. Nothing, untoward where you can say that maybe there, you know, I don't see any issue with the uptrend at all. I think the uptrend is absolutely intact in this one. Probably just have to look at a good entry point. Of course, we cannot trade that here in India. But if some of you are trading in CFDs or NRIs, you could obviously take a trade in this one. So Hang Seng, interesting look at Hang Seng. After a long time, I'm seeing some kind of bullish action in this kind of in this index, and this kind of action is a good news, especially when it happens in one of the weaker indices. So if you notice here, Hang Seng of all the indices we have seen hasn't retraced as much, and is now starting to, which is a good sign because it means that even the ones that were laggards, even those indices are catching up. But we have a pretty big resistance here. If you can see here, this level of 26,000 has been tested almost thrice and then took resistance and fell here as well. So that will be the acid test. If we get through that, it'll be really, really good. Nikkei again, bullish price action, not surprising. And overall, the market is bullish. Will be very, very interesting to see how it reacts because this is a multi-year, you can say, resistance level. So interesting days ahead. Of course this is an uptrend, so unless and until we get a reversal or a price reversal, for us the trend is up. And right now we are seeing what is sort of a consolidation. So let's see how long this will hold up. So US dollar today, it's very interesting that the rupee is appreciating and the dollar has actually made a big dip, something that wasn't being expected because we were seeing the dollar index was doing very well. So really, I would say some intervention by RBI maybe. So this is Nikkei in USD yen terms, which is sorry, in dollar terms, which is basically I've divided that to get a better idea of how it's behaving because in dollar terms that makes a lot more sense. There's a lot of dollar money that is going to Japanese indices, so it makes a lot of sense to look at it. And again, like I mentioned, this is a multi-year high in dollar terms. So if I were to just keep zooming out, or better still, let me just go to weekly time frame. You will notice what I'm trying to say. This is 94 and look at the highs now. It's the same highs. And if it gets taken out, we're talking about a new all-time highs in Nikkei in dollar terms, mind you, in dollar terms, not in yen terms. Okay. So if that were to happen, that's a very bullish signal for the equities. I would actually say that is a very bullish signal for the equities overall. So despite what we are noticing in the broader economies and the geopolitical tension, for some reason the financial markets sort of are giving a completely different story. I generally give I always believe that financial participants are some a very savvy lot and they know what is going to happen. They sort of it's like market just has a sense of what is going to happen a lot earlier. So maybe we are reading too much into all of these geopolitical issues, and well, we never know that, but at least the market seems to be not be bothered by it. So gold, I think the gold prices have run their course. for now at least. As you can see here, big bearish candle, and you can see here the 20 DMA was too far away from 50 DMA and the price had gone up. Then we got a nice bearish engulfing on the daily, classic sell signal. Something like this I actually think could happen on the mid cap indices as well, because very similar action is being observed there. And of course I expect it to come back and then consolidate before it makes a new up move. So yeah, the trend is intact. I'm not saying that gold trend is over, but we are definitely in a period of consolidation. So copper futures uptrend intact, same price action, 20 above 50 DMA. The price action is pretty bullish. We're seeing a small sort of a consolidation here, and you can see this is a minor support level as well. So yeah, the trend is up, and nothing to worry there. So this is the dollar index. Really interesting. The dollar index is actually going higher. It sort of makes me wonder why the USD, why the rupee is appreciating. Definitely intervention by RBI. And the rupee appreciation for some reason seems to be helping the banking stocks, maybe. As you can see, the banking index today also breaking out higher. So very interesting price action today that we are observing. And if we are to, if we get a banking index breakout, then obviously, it's going to be very, very good for the broader markets. But I think we could get sort of I think what is going to happen is we are going to get pockets of rallies in the markets where maybe mid and small caps take a breather, and maybe the large caps, maybe the financial sort of, which have been lagging, they sort of catch up. So I think that is what is happening here. Maybe bank nifty will catch up with the mid cap and the small cap rally, which is obviously been a lot faster. If you notice here, this is pre-COVID levels from where the bank index has fallen a lot, but has hardly made those made up those losses. Whereas when we saw the mid cap index, they have done really well. So perhaps we are going to see the banking catch up. The small cap index again, very similar price action to what we're seeing in gold. 20 DMA above 50 DMA, and the price really stretched higher. But the only thing is that this one can keep going higher. Till we like run into substantial resistance. In my opinion, I think it's already quite stretched. This is not a great time to actually be entering the small cap index. If you're looking at parking lump sum, obviously maybe stock specific, you could still buy something, but you know the inevitable thing is that you are going to get a correction. And as an investor, the best thing you can do is, once you're clear that we have a nice uptrend, I always advise to don't enter into an uptrend when it's so far stretched. Just wait for a retracement. You'll get a retracement, and then you can pick up stocks that you like, and there are a lot of them. But at the moment, I think it's just too overstretched. You will just end up buying stocks at 30-40% premium in some cases, and in some cases maybe only 20% premium. But not worth it if you're investing lump sum, or just wait for the retracement to occur. It will happen. It is how the market moves. It will not keep going higher and higher forever. It will retrace. You will get better opportunities, and you will get better risk reward ratios. At the moment, to enter here and then get caught up in what could be a correction and just get frustrated, I think it's better to just wait and let the markets correct. So yeah, this is Brent crude again. So I've run through the entire cycle. So that's it. Thank you so much for watching.